Hey, technology's changing out there, and so we have something that's becoming, it's not an issue, but you just got to be aware of it. It's something we have to address, and that's with the underwriting process. And so what's happening is, in banking is the big change. How you send and receive money is the big change, right? It used to be just, hey, give me cash, shoot me a check, right? One of those deals. Now it's not, all right? Now it's what? Hey, Venmo me this. Hey, Zelle me that, right? Like all that, that's the way you send me Zelle, I'll send you Zelle, whatever. Right, you take your kids out for, or your friends take your kids out for 2 lunches and you owe them $60, and so you just Zelle them the money, okay, or Venmo, whatever. Any of those transactions didn't really exist long ago, and underwriters didn't really care about it too much. But as it's been growing, they're getting reviewed more and more. So I want to talk more about it, go a little deeper. All right, so normally you got to give your 2 months of bank statements, okay, when you go to get a loan. Here's your 2 months of bank statements. Underwriter always going to look at the balances. How much was in there when you got the statement, how much is left, insufficient funds, and they're going to review all the transactions. They're looking for irregular deposits is normally what they're looking for, or maybe payments to the IRS, or some kind of undisclosed debt. Well, now with the growth of Zelle, right, Zelle, Venmo, Chime, all those online transfer type applications, is they're looking at these recurring payments. Are these payments recurring? Is this Zelle for $100 to whatever, Walmart? Is that recurring? Okay. The reason I want to know is it recurring is it a debt? Is it consumer debt? Is it something you're obligated to? The other one we're seeing a lot of is Affirm. Okay. Affirm is one where we're seeing it. We just had a client recently. They bought plane tickets. It was like $2,000 or something. They didn't have all that money right away. So Affirm says, hey, here's $2,000. Pay us over 6 months. Pay us over a year, 3 months, whatever the terms are they work out. It's always a short-term type of loan. Well, those show up on your bank statements. We see them. They're right there. So as soon as the underwriter sees these recurring payments, we had one also come back with Zelle. Zelle, and it was $6,000. This person Zelled $6,000 to somebody. Well, underwriter wanted to know, hey, what was that $6,000 for? Why do they want to know that? They want to make sure it's not a down payment on a vehicle. Okay, they want to make sure it's not a half down to hold a boat. Like they want to make sure you're not incurring any more debt, because they don't want any of this to affect your debt to income ratio, which is also called your DTI. Okay, so if you have a $100 recurring payment every month, well, that needs to be added to the debt to income ratio. And what could happen? You may not qualify anymore. All right, so if you're watching this and you're looking at getting pre-approved, or you have clients that are looking at getting pre-approved, just keep an eye on that, okay? Does your bank statements do they have any kind of recurring payments like that? If they do, you're going to want to let your lender know about it, okay? Don't wait. Don't hope they miss it, okay? More likely they're going to find it, all right? Matter of fact, while on that subject, don't ever hide anything from the lender, okay? They're going to find it. The way technology is right now and how they search everywhere for everything, they're going to find out. All right. So anyhow, I hope that helps you out. Gives you a little tip, a little insight in how the business is changing with technology. Anything we can do to help, let us know. 239-437-4278. Have a great day.